Investors still have shares of Constellation Brands on their watch list after the company lowered its guidance for the year, citing higher raw material costs and several other recent headwinds that offset an 8% rise in beer sales. Constellation Brands CEO Bill Newlands joins us now. Bill, Happy New Year to you. Good to see you as always. So I think the outlook may have caught some folks by surprise. Is it more that you're still seeing stubborn inflation in the business, or consumers are pushing back a little bit on some price increases?
A couple of things, Brian. First of all, inflation, while it seems to be off its peak, is still higher than it was prior to pandemic. So we're being very watchful about that because, a lot of our input costs go in today, even if inflation continues to go down. So that's certainly a challenge. The other thing is, consumers at times, when you take pricing, and we took some additional pricing in October, have some short-term sensitivity to it. Fortunately, the strength of our brands helps to overcome that. We actually gained more share in Q3 of this year than we did in Q3 of last year. So we still have a very strong consumer base, but certainly the inflationary environment has hung on a bit longer than we had hoped.
There had been some focus at the midpoint of last year, I believe it was, around the depletion rates. Where are you seeing some improvement, perhaps, in that part of the business?
Well, we have a number of things that are performing very strongly. Our Chelada business, our Pacifico brand, both are up over 40%. So those year on year have done tremendously well. We did see some minor softness late in the quarter because it came after the price increase that I touched on a bit ago. But fortunately, we've already seen the turnaround in California, where most of the softness was noted. In December, we already picked up 7 points versus what the going rate was in November. So it's very typical when you raise price to see some of this short-term impact. And we fully expect that things are going to continue to go well for us going forward.
Hey, Bill, it's Julie here. We are, of course, in what some have dubbed dry January. And I've noticed some sort of think pieces lately about Gen Z, I'm speaking for myself, Gen Z, not drinking as much as prior generations. And I'm just wondering if you've seen any of that show up in your consumption trends, in your volume trends, especially as you look across demographics?
Actually, this year, people feel like there'll be a little less of it than there has been in some other years. Again, that remains to be seen. But, one of the things that we're doing, we're adding this March Modelo Oro, which is the gold standard in light beer, into the Modelo brand after some great test markets this past year. We're also doing Corona non-alcoholic this year to touch on those very scenarios if and when they play themselves out. So we're very aware of it. Frankly, I don't think it's going to be as much as we've seen in some prior years, but certainly there's an element of the population that engages in that behavior.
And Bill, this seems to be shaping up to be the year of the ready-to-drink cocktail. You have the Jack and Coke product that's starting to roll out in the markets. You have success of High Noon. How do you plan to attack this market this year?
We've done a number of things. First of all, our Fresca alignment with Coca-Cola is out in the marketplace, and those are just fantastic liquids. We have both a Paloma and we have a vodka spritz in that area. Also, our Chelada franchise really competes in that same area. We've added a 12-ounce and variety packs and a whole host of new options that open up new consumer occasions and new drinking occasions, and frankly, new consumers as part of that whole effort. So we think that whole convenience betterment trends are all going to continue, and we're going to play a part in it.
One of the kind of components to how companies are restructuring their costs right now in advance of how much a recession might impact their businesses on their marketing spend. That's something that a lot of the food, beverage companies can't really do as much, especially when you think about some of the shifts in certain events that you would typically get your name or your brand around, as was acknowledged in this most recent earnings report. And so what does that real marketing spend and the kind of cost associated with that look like given some of those shifts?
Well, we're at a point where we are the loudest share of voice in our industry, and we're going to maintain that. We believe that continuing to speak to our consumer in these inflationary times is critically important. And we're doing it with Modelo, we're doing it with Pacifico, we're doing it with Corona, and we're going to continue that. We think that's good for the long-term element of the franchise. I think it becomes too easy to cut spend or to do things differently at a challenging time. We think it's a time to make sure you're continuing to engage with your consumer.
Bill, real quick before I let you go, is beer still recession-proof? And I bring this up because before you came on this past week, and I bought myself a Corona Premier at the bar. I paid $9 for it. I know it's a in-demand brand, but I started to think, should I be trading down to save a couple bucks here?
No, I wouldn't trade down. I think you made a great choice. So thank you for that.
But really, do you think, even in a mild recession, do you think beer will be as recession-proof as it has been in the past?
It's fairly recession resistant. The consumer still looks at many of the categories in which we play as an affordable luxury, and it's a critical piece of what they do for enjoyment. So I think we are going to continue to see this be an important category that does well, and certainly our brands will be at the forefront of that because of their sheer strength in the marketplace.
Bill, good to see you. Bill Newlands, Constellation Brands CEO. Thanks a lot.
Thanks very much.